What a day to jam. Markets are pretty good right now. Q's down a bit, but guys, we have IWM, small caps, all-time highs. We have gold, all-time highs. All the kind of the big catch-up trades that we had talked about, for the most part, really storming the gates. And so it's been nice to see, so much of these. CLSK, Graham. I mean, it's sold off a little bit now, but let's see what it's at.
The options are
on the day.
Those options, we're going for 1,000% there. If you're going for the max profit, like I am, currently up 511%.
Lousy, just 511%.
We're halfway there. We're all the way in the money. Let me go check and make sure that's still true. We are all the way in the money by 50 cents, which is just shocking. Nate, we should have gone shorter. We should have picked this Friday's expiration clearly.
I know. Yeah, you'd already be at your 1,000. But yeah, I mean, we're seeing the market really, kind of show us that there's no such thing as oversold, which is something I talk about all the time. But we're seeing it today. The mags are down a bit. I mean, not a lot, 0.6%, which is nothing crazy. But I guess with Tesla only up 0.7% instead of up 5%, it pulls them back down a little bit. Meta, Microsoft, Amazon, they've just been a little bit sluggish. Again, nothing crazy, just a little sluggish. Amazon down more significantly. And so I think those might be my next catch-up plays, to be honest with you. We've kind of rotated through some of these. I think our timing has been pretty good for the most part. But there's a couple that have now done the full catch-up circuit. And I think, Amazon, Meta, Microsoft, they might be next on my list to kind of play those catch-up moves. PGR, Progressive, has not caught up, Graham. It is.
I gave up on, I still have some PGR, but I gave up on my mega PGR position about a week or so ago. There was just two. I mean, to be honest, I do think PGR will be back to all-time highs here at some point. It's a matter of time, just like we said with Apple. But there's just other opportunities right now that are actually moving. Granted, now that I've said that, now that I'm out of it, it'll probably go haywire here very soon.
Well, I sure hope so, because I'm still holding some. So someone asked, can IWM keep going? I mean, the answer is yes. I will it keep going is a different question, but can it keep going? Absolutely yes. And a good case for that is, we broke through. Let me just actually go back to a weekly chart and give you a number here. We broke through the February highs on SPY at the end of June. Okay, folks, we broke through mid-June to about 611, 612. Okay, it is now September 23rd, and we are still grinding higher. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We've had 14 weeks since then. 13 out of 14 weeks have been green since the SPY broke all-time highs, and the IWM is just now breaking all-time highs. So can it go? Does it have more room? Certainly, yes. Now, will it go? Obviously, again, different question, but I do think it's a different question, and I think people who kind of get stuck on that, the market's overextended, it's too high, often, regret that decision 3 months later when they realize they wish they would have been in. And, one of the ways that I like to think about it, folks, it's really simple. Just take a strategy like overnight options or automated options or something like that kind of just is pure, bullish. If you have a situation where you have 10 weeks and 8 of them go up and the market turns around and you have 2 losers and you go 8-2, then you're probably going to be more net ahead than looking at the market for 10 weeks and being on the sidelines because you're worried and then saying when the 2 weeks comes around, aha, I knew that pullback was coming, right? And so I think that's kind of the thing that a lot of retail traders fall into. I always make fun of my friend Sean. I still text him about every 2 weeks or so because he's still waiting for the other shoe to drop from COVID. And when we got like that April flush, he was like, see, I knew this would happen. And I had to tell him, like, Sean, dude, the market's 80% higher than when you decided to step out on the sidelines and wait for a buy the dip opportunity. And I actually think that's what a lot of retail traders do, kind of in a microcosm. The market gets ripping, they say, it's gonna pull back, and they stay on the sidelines or they try to short, or they do lots of different things. And then maybe the market does eventually have that pullback and they think, see, okay, now I'm justified. But in the vast majority of cases, you're actually better just riding the wave and then taking your hit when the market does make that turn. And that's really my mentality in totality. If you look at the way I trade, I'm very comfortable saying, listen, I expect the market to be more bullish than not over time. That means I'm almost always bullish. Overnight options is always bullish. Automated options is always bullish. And sure, I'll get hit, I'll get punched in the teeth at some point. But if I can rack up 10 wins before that happens, I'm going to be net ahead. So that's my diatribe. Just I think you do have to be careful with that mentality. I've seen it burn a lot of traders. And for me, I'm more in the camp of let's trade the momentum while it's here, knowing, of course, we'll be on the wrong side of it at some point. But as long as we rack up enough profits, and then that, then the question becomes risk management, trade management, all that sort of stuff, you're going to be net ahead in a bullish market. So anyway, sorry, Graham, that was a long.
No, you're
my God, is it time for closing playbook? Yeah.
Yeah, exactly.
I think that's cool. You had a line in there that you should probably trademark. It was like what, mentality for totality, something that rhymed really nicely.
Yeah, I was going to try and say it fast. So that my mentality and totality, my mentality and totality. Let's not pick on Nathan the whole opening playbook. Why don't you say something I can make fun of, Graham?
Yeah,
there you go. Perfect.
I love it. So we'll just keep on chugging along. Actually, Nate, you'll see my prediction this week is I give up on calling this pullback, which probably means it's going to happen this week. That's what happened last time when I finally threw in the towel. I said, I've been saying we're getting pulled back for too long now. But I'm just still going to state my ground that I'm just not going heavy right now. I'm just using light position sizing. And it's so far been paying off. We'll look at some of the trades that we've been taking. CLSK, this was posted in Telegram just a few days ago, up 313%. Now up, I'm looking at it right now, my account, 583%. So hopefully you guys were able to make some money off CLSK. I'd say that was definitely the pick of the week or pick of the year, maybe for me. I don't know if I've ever closed 1,000% plus gain. I may have, but I can't remember. This one is pretty memorable. Other TG of the week. I posted this in Telegram, and I threw in a kind of funny hedge, if you will, but I've been doing over the last year, and I haven't been super consistent with it, but every month I've been picking 5 stocks I really like and just doing monthly options on them, basically a monthly wrap order, actually just one strike out of the money, basically shooting for about 150% from a small move in that stock over the month. And I was looking at the results. I finished up my first year of doing it, and it was really, really strong. I believe it was about 60. Wait, actually, I put it in here somewhere. Where did I put it? I'll give you the exact number right now. I told it to you. I don't want to make up a number here. It was about 12% a month on average. Average return 12% a month, which isn't crazy, but after a year,
that's pretty crazy.
That's 144% a year, no compounding. So 144% a year. Just being steady, Eddie, and just picking a couple stocks I like, structuring the options the right way, and letting them sit in the background. It's not active trading. It's not like I'm being tactical here. I'm just picking really strong stocks and saying I bet they'll drift higher. So I posted in Telegram the other day the stocks that I picked for this month. In the options, you can see the options on some of them here, what I could fit into the screenshot. So if you're not in Telegram, please, let's make sure you are in Telegram. It's free. David, if you don't mind, post that in the chat, the link to join Telegram. You can go get those picks right now. I'm not charging anything for it. Actually, funny enough, Nate, we did publish it about a year ago, but it just wasn't exciting enough. I don't think enough people found the excitement behind it, which I get. It's not exciting. It's not as fun as trading a 60-minute trade in the morning. But with that said, it's really worked out well. So I just want to start giving that value to you guys each and every month. Just remind me if I forget. Typically on expiration day, we'll just dial up the next picks. And the cool thing here, Nate, is my goal is to win 3 out of those 5 picks. So you know me, I'm not going for 90% win rate. My goal is to win 3 out of 5. If I win 3 out of 5, I net about 50% return that month.
Yeah, that's pretty phenomenal. I do have to say, we've obviously gotten a bit spoiled when we say things like 12% per month isn't that good. Meanwhile, it's like 200 plus compounding percent, like you destroy any hedge fund in the history of the world. But yeah, it's not that good.
I think we lose track of like what the other comparisons are out there. Like I saw a sign the other day. you can get 4.25% on a 12 or 18 month, CD or something at the bank or whatever. And it's like, 4% over a year compared to this. Like,
it's pretty dramatic. Des said he got 1,200% on CLSK. By the way, Des is curious. I'm just curious. Is that your biggest ROI ever, like on a single trade? Because that's pretty monstrous. Hey Graham, do you have a spot in there to pause and ask about Tuesdays?
Yeah, good call.
For closing playbook or no?
Yes, I do. My other point here is the cool thing too. And we talk about win rate not being important. Real quick, I only have to win 2 of these 5 to break even. So even if 3 of the 5 lose, even if I have a 40% win rate, I'm not losing anything. And that should hopefully be a small eye opener on why structuring the options the right way is important. I can have a terrible win rate and be totally fine. So we'll cover more on this each month. But while we're here, Nate, good point. What do you guys think? So I gave you guys in Telegram. Maybe that should have been one of my Telegrams of the week. Let me just pull this up real quick. Telegram. Oh, gold. Gotta love gold. All right. So here was my, I don't even know if you can read this right now because it's probably small text. Yesterday, I told you guys we were trading gaps in the closing playbook. I could not get my scanner to work. I got it to work. That's the first update there. So we'll be able to use that now. But generally, we like to keep themes here. It makes it easy on us. It makes it easy on you guys so you know what to expect. Obviously, in the opening playbook, the morning sessions, we have our themes. Like today is Tuesday, which is always my weekly outlook. For the closing playbook, we'd like to get some themes on the table as well. So generally speaking, and it won't always be this, but generally speaking, Monday we'll do gap trade setups like we did on SMPS, Fortinet yesterday. Tuesday, we've got these question marks because we haven't picked something yet. Wednesday, we'll do a little like AOP style, Nate, auto exit picks, 10 days till expiration with the target. I know you guys love using that automated target. Thursday, you guys know, is Shotgun Thursday, which means lots of losing trades, but also a couple really, really great winners. And then Friday, we'll look at monthly options positions, portfolio picks, any other sort of bonus thing over the weekend. Of course, we'll be looking at earnings every day in the room. Now, you'll see the note here. Tuesday is still blank. So we're going to ask you guys in the chat and think theme. Don't think like day trading NVIDIA. Just like a broad theme. What should we focus on Tuesdays in the closing playbook? And keep in mind, we have about 30 minutes in that window. We like to keep it to active trading. It's the morning sessions. We like to do the trainings. In the evening, we like to just focus straight on trading. So if you guys got any opinions there on what would be a fun one to do Tuesday routinely for the most part, feel free to post in the chat.
Yeah, I mean, we tossed around some ideas. We'll let the chat weigh in. But I think it would be cool to do something that maybe we don't do a whole lot in the other sessions, whether it's alternative assets, something like that. But
Sean says Thursday is a test of men. Your friend Dave picks, Mark. That's actually probably a good idea. So you guys, honestly, Dave is the one that tipped me off to CLSK. We do need some more Dave picks.
Sweet says other commodities. That was kind of one of the things on my list. Although I also told you, Graham, I've never traded penny stocks in my life, but I know you've actually found a couple good ones. Maybe you and Dave should do the penny stock show on Tuesdays and find some, because those were some pretty. It
would definitely be interesting. Yeah, my penny stock thing, Nate, it's crazy. Newton was designed to. I'm getting way off task here. We're gonna get way behind on the schedule, but Newton was designed to work really well on swing trading, like large caps. You can day trade, of course, too. But I have been looking at like penny stocks. Like here's BitF, which I actually like this one right now. I've got an investment in it. But you can see here, if you were to day trade, just the underlying, you can do the options if you want. But if you just did the underlying, Newton is really stinking good on these penny stocks. If I had a couple more examples here, I'd pull them up for you. I don't actively normally trade penny stocks, but it's something I've dabbled with just with Newton. I mean, this is obviously pre-market, but even if you opened here at the market open with a red candle, it's already gone downwards. And what I like to do with the penny stocks is you see how these bars are growing. What I would like to do is the second we get a retracement, even if it's still red, that would just be a profit taking point and move on to the next. So that could be fun. Granted, I am no penny stock pro, but I just have noticed that Newton works really well intraday swing trading or day trading penny stocks. So if you went on a daily chart, you can see like a entry here when the bar ticked lower, come down here, take profits down here on a penny stock. So what is that? 7 cents on BITF, which is a $3 stock. Nothing crazy, but 2-3% there. Options move as well, so that could be fun. But let's see if we got any. Did we have any other opinions that stuck out?
A couple of commodity ones. Someone mentioned looking at volume, Mexican stocks for Taco Tuesday.
Mm-hmm.
So we can explore the Mexican stock market. I think Dave C. It was going to be a popular opinion if we get any more 1,000% winners.
Dave, yeah. All right, I got commodities, penny stocks. I just want to take notes so we can circle back. Newton Master, yeah, we can do one. I can actually show you how it's built. You can rebuild it on your end if you want to. Like I said, we give away too much value in here sometimes. I think I'm not supposed to do that. I built it myself. It took a lot of work, but I'll just teach you how to redo it if you want to. Of course, using the tool is way easier. Dividends, weekly ETF payers. Let me just write down some of these.
Speaking of giving things away, I've got our 2 lucky winners from the sweatshirt drawing for the people who watched the videos over the weekend. We had a bunch of entries, so we had to randomly pick 2 of them. And the winners are Lisa, who's got an email with Spike99 in the address, and Scott, who's got an email with Card99 in the address. Those are
299s.
299s in the address. Now, if you could private message me, direct message me. If you're here today, I'm going to need some more information from you. So hit me up in the private messaging in the chat, Lisa and Scott.
Awesome. All right, I've got some notes here, Nate. We can
Graham, one
back.
of the other things that we could do on Tuesday, because I think we'll probably filter in some different things. I am finally launching high conviction income machine alerts for my HQ members. And so I'm not actually sure how many picks we're going to get a day, because it's kind of an interesting thing, right? I have these really strict criteria, but I don't stare at income machine and refresh it all day, every day. So I don't actually know how many opportunities are going to fit these stricter guidelines. So we're going to see in real time here all my HQ members. Hopefully, guys, by the end of today, by the way, you'll see the bot in there. But maybe on Tuesdays I could pull one of those high conviction ones out and give it for free if my HQ members allow me to.
All right, cool. All right, I just finished. I'm taking notes. I'm now like 20 minutes behind schedule here, but we'll circle back, get something good there. Here's some of our open trades right now. This is those monthly picks I was talking about. I just took this screenshot now. I'm only a couple days into it. You can see turning along nice. It's supposed to just work in the background, just turn away. Nate, I put about $1,000 into each pick. So the most I would make here is about $7,500. I don't expect to do that. I expect to do about 50%. So about $2,000, $2,500 for the month. It's kind of what I'm shooting for there. On our opening playbook trades, I should post our updated screenshot here with CLSK up over 500% now, but we got this one, Tesla at 300%, gold churning nicely, a couple others. I need to put SMPS and Fortinet in there. Let's see where those at. Fortinet's bound break even, SMPS slightly down.
Fortinet's break even, Graham, but if you look at the weekly chart or the daily chart, it's really actually looking very good right now. So if you guys didn't get into that one, it still is right around break even. I think it looks really good.
Awesome. For the morning market update, nothing too crazy across the board. Major markets, S&P and NASDAQ mostly flat. This is still about the same. Someone just asked about the 60-minute income trade. It is completely range bound. Let me just show you it to you here. Oh, I can't do it while screen sharing. Just to show you how dull today is. I mean, here's the XSP. This is a tiny, tiny range, 0.11%. That's one of the smaller ranges we've seen. Normally, when you have a range that tight, it easily breaks out one side or the other because it does not need that much movement. But we are seeing absolutely no movement today, just chop. Look at that. I mean, just back and forth, back and forth. With that said, we do have small caps up nicely, emerging markets up nicely, and the VIX is actually up above 16 today, even with the markets chugging along. So that's interesting to see. Nate, part of your VIX is broken spiel there. The VIX should be down today, but it's actually popping up. For interesting things to keep in mind this week, we have a lot of news. Trump just spoke about 30 minutes ago. I'm not sure exactly what he said, but he put that on the calendar. Powell speaks at 12:35, so right around noon, Powell will speak. And then later tonight, President Trump will speak again. Again, no idea what he's going to talk about there, but it could be market moving news. It could be nothing, like where the next World Cup is going to be played. We'll see. Wednesday morning, we have new home sales, which this is a number that's becoming more and more important as interest rates turn into focus. We've seen housing market in what truly is a housing market recession right now. I know down here in Florida, we've seen prices drop 10, even 20% in some areas. So now with the interest rates coming down, actually, funny enough, I've been getting tons of mail saying time to refinance, time to refinance. We'll see. This number should be ticking up. We'll see if that's true or not. That will give us a true little inside scoop of what the economy is truly feeling, not just these big companies that are making mega profits. How is the little guy doing? Thursday morning, we have GDP, which is an important one, jobless claims as well, and then PCE on Friday. So we have an action-packed week for news here. And then next week, another full slate here. A couple of weeks ago, I think we had 2 things on the calendar. Now we got a lot. Tuesday, consumer confidence is a big one. PMI is a big one. These are during market hours. These are not pre-market. So for like people trading the 60-minute income or even Lance's 4 p.m. payouts, these are going to be market-moving events during the morning. Hopefully for overnight options, Nate, you've already hit your target by then, so you don't even have to worry about it. But coming up later in the week, jobless claims again, unemployment rate on Friday. These are all starting to become more and more and more important as interest rates are in high focus. For charts of the week, I'm going to show you this again here. The Fed, every time they've cut rates near all-time highs, within 2% of all-time highs, the next month can be rocky. If we get a rocky move here over the next 30 days, which would not shock me, I also would not be surprised to see all of the headlines coming out. UBS predicts a recession. JP Morgan calling for a recession. Citigroup calling for a recession. Everybody's going to say it. But here's what I want you to pay attention to. Not the news, not the fear and greed headlines, not the market manipulation that the big institutions are going to do. I want you to focus on the data here, that over the next year, 100% of the time, when this scenario happened, 100% of the time, the market's finished higher. The lowest return over the next year was 2.6%. The average return was about 14%. I told you guys earlier that I'm about in that 15% range on the S&P 500. So even if we do get a shakeout here over the next month, I really, really want you to tune out the news. I'm sure we'll have tons of people in the opening playbook asking, is a recession here? What's going on? Markets are falling. Everybody's saying yada, yada, yada. They tend to be wrong. They tend to be late. We like to look at the data, and the data says we got a melt up incoming. Also, I've been showing you this chart. I'll show it to you again. Gold on a relative strength basis is breaking out above the S&P 500 for the first time since 2002. This is the last time it happened. Gold went on a crazy massive rally, went from like 300 to 800, went even higher past there. I don't know the exact number, so I don't want to give you an exact number. As you know now, this happened in 2024. Actually, maybe 2025. It's just right at the beginning of the year, we had that break above on relative strength. Gold was at like 1,600. It's funny enough, that was like 2023. I was telling people to start buying it. I was buying it myself. I really like gold. I think it's cool that it's shiny. But I also thought it was going to appreciate in value. Why? Because the data said the same thing. Data says when interest rates come, gold goes up 100% of the time, even in a recessionary environment. So I started buying at 1,600. I added at 2,000. I added at 2,600. We got on the round table when it was 3,200 a few months back, and everybody says this is a disaster. Do not buy gold. It's going to crater. I said, no, guys, gold's going to keep going to 4,000 or 5,000. And sure enough, we're at 3,800 today. It might even be higher. Let me look at where gold is at now. 3,800 was the number I last saw. Yep, it's at 3,800 on the dot right now. And I think you'll still see those headlines saying this is it for gold. This is the end of the run. Look at this chart right here, guys. Look at the relative strength where we are now. Look at where it peaked in the past. Look at where it peaked in the past. Do you think this run is done? I think not. You have your own opinion. Be my guest. I do not think this run is done. I think we're going to see gold here at 4,000 easily. I think 5,000 more likely than not by the end of next year. So just keep that in mind. But we still have a ways to go. I told you guys in Telegram, if we do get a nice little pullback here, if we get a nice little opportunity to buy, maybe we'll set up a longer term outlook play on gold. I know we did one previously with the Dream Portfolio where it was basically, actually, I don't want to say the exact number. There's a couple different ways we can do it. One, we can say if gold doesn't fall, we get 30, 40%. Another one is if gold stays flat, we get like 100%. The one we did in Dream Portfolio last time was during that March sell-off. We said, I bet you gold is going to be up 1% or more over the next year. If so, we made 72% return on investment. So while gold is up 20, 30, 40% this year, that trades up 72%. Pretty awesome. So we'll have fun, rigging up some options here for you guys. Let's talk about crypto real quick here. The president wants to push for opening 401k retirement plans to crypto. They're trying to press the SEC for it. If this gets approved, that would be very big. Now, I'm a little bit fearful, and Nate, I'm not sure your opinion here. Obviously, I think Bitcoin is here to stay. I think it's going to continue to grow. I also think Bitcoin is going to still have big drawdowns. I still think we're going to see 50% drawdowns in Bitcoin at some point. Maybe that's aggressive, but still 40% drawdowns in Bitcoin. I think that's very, very realistic. And my concern is that we're going to get a bunch of people excited that they can buy it, and the retirement accounts are going to see that big drawdown, get shook out, sell, get totally hosed. And that's just a fear of mine here right now with the timing of all of this. I wish this was approved when Bitcoin was at 16K a couple of years ago when I first went on air and told people, hey, you probably should start buying this before the halving. But hey, either way, it's always good to have more options. I just don't want to see this kind of come back to smack us in the face.
Yeah, I mean, I do think that there's some risk of that, but I guess I would say there's some risk of that in most things, I think people have probably already experienced that to some degree with it, being like you can buy Bitcoin directly through your Cash App now and some different things like that. So I think it has been kind of a slower migration into that. But yeah, I mean, maybe the generation who's closer to retirement has not had as easy of access to it. And I think you have to be careful. I'm sure, I'm not a big financial advisor fan, so I can't say that I've talked to many of them. But I'm sure that they have some guidelines, don't do more than 5% of your portfolio and that sort of stuff that they're already kind of working on to migrate their people into that.
Yeah, definitely. And forgive me, I keep sniffling. I'm still getting over this weekend little bug I had. I feel great today, but just got the drains coming. So forgive me. I apologize for that. Last thing here with Bitcoin is I think we are going to see a face melt opportunity here. And I guess I should say that with a grain of salt. I think Bitcoin could go up 20, 30, 40% from here through the end of the year, which is a really, really great return for an underlying position. Why am I so confident? Well, when we overlay the money supply, which, as you guys know, with the rate cuts, with everything going on globally, this number is going up and up and up. Printing is back. Quantitative easing is back. Every time this happens, Bitcoin follows. It has about a 12-week lag on it. But you can see here that green chart overlaid over that black chart. Every time money supply starts going up, Bitcoin is soon to follow. So I really, really do think that we're going to see $150,000 in Bitcoin by New Year's. And I could be wrong. It could be 140. It could be 160. But somewhere in that range of $150,000. That is the same number, Nate, that about 20 months ago, Bitcoin was at $37,000, $40,000. I had my first big crypto webinar. It was the last chance crypto is what we called it. That is the same number I gave you guys then. And we are almost there. So it's crazy to see that.
What was Bitcoin at when you did the last chance?
30, I think it was 37, 36, 37.
Oh, wow. Okay.
And I told you guys based on the number, because everybody was predicting crypto's going to 300, it's going to 400. Some people are saying it's going to 0. I just ran the numbers, Nate. What I did was I just took the diminishing returns of each cycle, averaged it out to see what this cycle would likely pay, and it put us right at $150,000. So we are right on target for that, which is really, really cool to see. Hopefully you've been able to benefit. But if not, I believe there's still an opportunity. And someone's asking about the dream portfolio here in the chat. If we do get another little shakeout here, we will build another dream portfolio for you, and you can bet your bottom dollar Bitcoin is going to be in it for a really, really nice return. I'm talking 100, 200, 300% return on Bitcoin through the end of the year by just structuring the options the right way. For earnings this week, we have a quieter week of earnings. We're not really in the heart of earnings season right now, but we still have Micron today after the close. We can take a look at that in the closing playbook. KB Homes on Wednesday, which again, I just like looking at what the home builders are doing, what they're saying, because I think it gives me a good gauge of what's going on in the economy. Another one similar to that is Costco and CarMax. Both of these, I'm probably not going to go gear up to trade Costco earnings. I'm not going to be super excited to see, the Costco beat revenue number. What I care about is hearing their guidance for the future. What are they seeing now and what are they predicting? because I do think, Nate, that we are kind of getting masked right now, where there are like there's a disparity of the people making a ton of money right now and the people really struggling. I actually saw a report this morning that 3 of the 50 states are in a recession. But you don't hear about that because the country as a whole is doing really great. So I think that these sort of reports, the guidance we'll hear from these type of companies will give us a little insight there. Market overview. Last class, I told you I'm looking for a sell the news event in September. We knew rate cuts were coming. We knew they should be 0.25%. If that happened, I said we're probably going to sell the news. So don't be shocked. But I think we're going to have a red hot Q4. I still believe that. And where we are now, Nate, did we sell the news?
We sold
one day.
Sold like crazy for about 5 minutes.
5 minutes of sell the news. And then up and away from there last week. It is just crazy out here. We did have that ascending triangle breakout. Technically speaking, this is what it should look like. With that said, I still anticipated a sell the news. But let's look down here at Newton. Nate, I've been showing one of the reasons I was calling for a pullback is we had this arc here, the slowing of momentum. And when you have Newton on your chart, you can see that very easily down here, the slowing of momentum. Well, look what happened now. It's just completely reverse course. We never even touched the red, which is very normal to touch the red before going back up. But things are looking really strong right now. So where do we go from here? Well, right now in the fear and greed index, we are still in the greed. We're inching back a little bit higher. But realistically, in my opinion, I would think we'd be in extreme greed. But the internals are not saying that. So it doesn't really matter what my emotions say. My emotions say, this is absolutely insane. This is crazy. What does the data say? Data says that we are not overcooked yet, which, again, I cannot even wrap my head around. If we're looking at the CPC, the put to call ratio, looking at the options market to give us some insight here, we have a triple touch at 0.75. I don't think I've seen this before, where we've touched that 0.75 number on the dot 3 times in a row over the last month. Why is that important? Well, if you've been around the opening playbook, you know that when we get a break below 0.75, when we get down here, that's when we say, we're overcooked. We're probably going to see a pullback. We have touched that line and kept going higher. Touch that line, kept going higher. Touch that line, and the markets are still going higher. So we still have not been overcooked on the options market. We've gotten very, very close. We've really pushed our boundaries here, but there's no clear signal that we're overcooked yet. Seasonally speaking, we're here in September. September is normally the worst month of the year. It's been a great month this year. So seasonals have not matched up so far in September. They've done good for us in the past this year, but for September, it's been the complete opposite. And if we look at the presidential patterns, Nate, I need a new chart. We have broken out of the presidential patterns. We are now up 14%, I think, on the year, the S&P 500. So my chart here was a max of 12%. We have broken out. We have bucked the seasonal trend of September, and we've gone higher. This does make me a little bit leery that this just doesn't seem right. But again, following the data, all things are pointing to a very, very, very good market upcoming. And again, I showed you what happens when the Fed cuts rates near all-time highs. What comes next? You guys should know that 100% of the time over the next year, markets go higher. So again, just following the data, not my feelings. I have to remain long-term bullish. My upcoming prediction here is just such a non-prediction. It's just that this pullback will come at some point, but I give up on trying to time it. I've done it for a few weeks now. I've said it could be this week, could be this week. I think it's going to be this week. I give up. There's no clear sign from the data. The put to call ratio hasn't told us anything. The fear and greed, the data has not told us anything. So I'm still just going to keep trading bullish like we always do, and still just going to keep a light position sizing until we get a better buying spot here. Funny enough, Nate, I think I've been on like the hottest trading streak that I've had in a long time with some of my positions. The size hasn't been there, but like CLSLK, Tesla, gold, Oracle, O'Reilly, some of these picks have just been insane. But that's just because I guess at this point I'm just saying we're just going to continue trading with the flow of the market and see what happens. And so far, so good.
Yeah, but it's funny you say that. I literally just upstairs grabbed coffee about 10 minutes ago, and my wife was up there, and I said, "Babe, this streak I'm on right now in my trading is unbelievable. I really should have closed all my investments, just use my entire portfolio account in every single trade, and we'd be buying an island at this point." But easier said in hindsight.
Yeah, but it's just I think the cool thing is even trading lightly, we can still outperform the stock market by using options the right way. And we'll get into that here in just a moment. But it is good. Just I think it's really, really hard. And every time I do this, Nate, I come back and remind myself it's really, really hard to try and time a pullback because the markets like to go up. About 70% of the time, markets are going higher. Now, that doesn't mean they're going up 1% a day, but a lot of the times, like today, the S&P's down slightly today, but typically, 0.1%, 0.15%, 0.05%, just grinding.
I think those are the new pullbacks, Graham. 0.1% are the new pullbacks right now.
Yeah. So, all right, let's keep on rolling. Let me check the chat here, see if I missed anything. All right, let's go look at the sector view. Ray, where can we pull a chart of the put to call ratio? Good question. I always want to help you guys out here. Diane's asking, why is Oracle down so much today? That's a great question. Diane had an awesome day yesterday, but it is down today. All right, let me just pull this over here. Here's the put to call ratio. So you can see it right here. I'm going to drop this link in the chat. I doubt you can click it, so you might just have to copy and paste it and save it, see if that works. But what you do is go to stockcharts.com and just $CPC. $CPC. It's a good one to check. I think Bar Chart has a version as well. So you can check it out there. And again, 0.75 is my number for, where I said we might need to take some profit. And then 0.1, which actually I didn't even see this. This must have happened without it went above 0.1, which is typically saying it's time to buy, add to our positions. What day was that?
What was that, mid-September right
September
there?
September 17th.
Okay.
Let me look at September 17th. I think that was Fed Day. Yeah.
I'm sure it was.
Yeah, Fed Day. So following Fed Day, it said keep buying the markets. And it was right. Because again, point above 1 means buy the markets. And let me just show you here. Here's the 17th. Let me just squeeze this. It'll be easier to see. I got my limit order in the way. All right. 17th, it said buy, up, and away. So CPC is really, really good and helpful, in my opinion, for short-term decision making. All right. Let's see if I can get this to reset. All right. Let's go have some fun now. Again, I'm behind pace. Sector view. We know seasonally, September's weak. We like communications. We like energy, and we like healthcare from a seasonal perspective. That is not necessarily true from a current strength perspective right now. Communications is the one that's at the top of the list and seasonally strong. Energy, healthcare is more of a mixed bag. October, though, if we look forward a month, because we have about a week. We have about a week till October. Very, very good month for seasonals across all the sectors, especially tech, which we gotta love tech right now. It's right hand in hand with this AI melt up that we see coming. Rates are coming down. Big companies are going to keep getting bigger. They're going to keep eating little fishes and growing. The whales. Financial easing helps these financial companies. The staples is an interesting one. I'm not too excited. I'm not as excited about the staples, I should say, because typically those are better in recessionary times. But maybe we will see staples heat up here if we do see this disparity of the upper class growing and the lower class struggling. We'll see healthcare. Is another one. It's still sort of speculative for me. I still really like Eli Lilly, Novo in the long run. I think that they're going to totally dominate, and especially with AI and the advancements in technology, I think we're going to see a health tech boom here, if you will, but seasonally strong for healthcare as well. So for the current sectors, last class, here was our list. Bitcoin is at the top, which I'm going to throw in a couple more now that we can just start to monitor, because I figured why throw Bitcoin in there and not throw gold or bonds or small caps. So now for this week and going forward, I've added in gold, TLT, IWM here. This week, notable shifts. So again, I've added in a few more tickers. It's going to be a little bit, we're going to have to learn with this one. It's a little bit more to look at. So we have our 11 sectors. I've also added in gold. I've added in small caps because I want to be aware of this. Bitcoin is still in there, and then bonds are the new additions. I want to be aware, like, hey, why are we trading, maybe utilities when we could be trading small caps? Because it's not a sector, that's a broad market. But if we're trying to bottom feed here for sectors that aren't so good, wouldn't we rather be in something really strong that's alternative? So that's kind of the thought process there. So right now, for this week, I love technology. I love communications. These have been our top ones for a while now. I love industrials. That's like GE, HWM. They're great, great stocks. Financials I'm adding in here. I think financials are really good. Look at JP Morgan, look at Robinhood, really awesome stocks. For our more alternative plays, we still have gold. We've been making money on gold. We're going to keep making money on gold. IWM, this is one, Nate, that we have not been taking advantage of enough, in my opinion.
Agreed.
I think we can really, really start to take advantage of IWM here over the next 12 months. It's at the top of the list here. I love it. And then Bitcoin as well. Again, Bitcoin is one that we will be looking to put on a dream portfolio style play here soon. So for the nitty gritty, let's look at this. This was last week's signal. NVIDIA was the trade. Hopefully you took advantage of it. NVIDIA looks really good right now. It's actually got a little pullback today. So if you missed this one, go catch last week's recording. Of course, it's better if you actually have the software because it's going to give you a current trade in real time right now, because that's a beautiful thing about the software. In fact, let me go ahead and pull up the software right now. Nate, I am popping my ears right now more than ever in my life. It's great. I talk for 30 seconds and my ears get popped up. I'm hoping this is my last day of this. But let me go pull up the Apex software. So if you have the Apex software in the members portal, click here to access it. It's stinking awesome. Apple just hit the target 3 times in a row. So there's going to be no active signal for Apple because it just won. But you can see here plenty of active signals to trade, including NVIDIA we just talked about. So if you want to jump in on NVIDIA, it's got a little bit of a buy the dip here today. It's down 1.6%. You can get the call option, wrap order, max ROI spread. Look at those stats. Pretty darn remarkable. One that I did like right now, and again, it's a little bit more speculative, but I like Eli Lilly for the long haul. We know that seasonally, let's look at this. Healthcare has a very, very strong 4 months ahead. 1.5%, 2.6, 1.5, 0.5. Eli Lilly has been a bit beaten down lately, but with that in mind, we know that when this thing picks up steam, it can really heat up. And right now, it has not given confirmation. Like, it's not above the 200, the 50-day moving average here, but it is giving us an apex entry. Now, something about Eli Lilly is you can see the hold time is a little bit longer here. 108 days for Eli Lilly on average, but the win rate is pretty exceptional. In fact, I think I can take this one. Like the cool thing here, Nate, we can do a back test. Let's go back to 2005. Still 80% win rate, 8% average return on the stock. Wow. I mean, you can do any time frame here you want, and you can see Eli Lilly, 86% win rate, 10%, 172. But my point is that here it is a little bit longer of a hold time on Eli Lilly. So this is going to be one that kind of works in the background, kind of like those dream portfolio picks, kind of like those monthly options picks. But what I'm going to do here for Eli Lilly is we're going to have some fun. You can come here and trade the call option if you want. I'm going to give you guys a wrap order here. Let's see what it's got to say for us. I'll just post this in the chat here. I'm going to make it a little bit bigger for you guys. So look, this is January's expiration, which is actually pretty perfect. It times up really well because it's looking at the average hold time for Lilly to give us that expiration. It ties the average hold time to the closest expiration. But this matches up perfect because October, November, December, January, very, very good for healthcare. What do you know? Our expiration happens to be January. I really like this one right now. There you go. This is a 4-month outlook here. Max ROI right now, and I'll post this in here too. Max ROI, you get paid 122% if Eli Lilly ends in January above 750. To give you guys an idea, right now, Eli Lilly's at 748. It has to gain $2 or more over the next 4 months. If we look visually on a chart, I don't even know if I can do it here because it's so tiny. I'll bring up my Thinkorswim. It'll be easier to see. Let me pull up a weekly chart here. Here's Eli Lilly. By January 19th, this stock has to be above here to make 122%. Does anyone think that's a little bit mind-blowing?
It's completely mind-blowing.
This 100, I'm not talking like 1.2%. I'm not talking 12%. I'm talking about more than double your money if Eli Lilly gains $1.50 from here over the next 4 months during the seasonally strongest time period for the stock. Of course, it could not work out. You still need it to go higher. If it goes straight down, you're not going to win. But the crazy thing here is it could chop for 3 months. It could go nowhere for 3 months and then just barely sneeze and move higher, a couple bucks here in January, and you get paid 122%. And we know that historically this signal has worked 84% of the time. So anyways, that's my more conservative route there. And again, I say conservative, much different than Nate does. This is going for a little over 100% using the wrap order or that dollar option methodology that I like to use. But if you want to get crazy, which I like to get crazy, if you like, let me go look at the options to see that this is
by the way, Graham, as you're working through, because the 60-minute triggered at the same time, I think the chat got a little confused between 60-minute and everything. You're posting, guys, 60-minute. I mean, Graham, correct me if I'm wrong. 60-minute did trigger, but it's members only. That's in the Telegram.
Yes.
Nothing Graham's saying right now has anything to do with that trade.
Correct. 60-minute, we did get an entry, did get filled. All that details in there.
Okay.
Florian, who's my top dog analyst, he's a genius, was able to get all that information to you guys about the fills. For a little bit more aggressive of a trade, and this one still isn't that crazy. Let me go ahead and post this. This is going to be our more out of the money play here on Eli Lilly. But I'm going to show you too that this is not super crazy. This is 160% return on investment here on Eli Lilly. In this case, by January, you need above 800. So again, just above 800. And actually, I might need to look at this one, Nate. We've been debugging this. I think the target price on Eli Lilly should be quite a bit higher than what it's showing here.
Guys, the 60-minute trade. I'm sorry, Graham. I'm just the chat. The chat's confused. The 60-minute trade is in the members Telegram, not Graham's Telegram. I don't know if you guys. It's in the membership. So I don't know if we're talking about the same thing here.
Confusion. There was some talk about whether there was a trade coming out, and I had answered to somebody that like the window was closing, so it didn't look like, wasn't sure we were going to get a trade today, and then it came out just kind of at the end of the window. So I posted, hey, just there is an actual trade in the Telegram, and may have thrown a bunch of people off thinking it was in the general Telegram.
I mean, I'm looking at it right now. A whole bunch of people are saying it's not in there, but I'm looking at it now. And
it's in the 60-minute Telegram. There are 3 posts. One is the trade. The other 2 are the fills and the targets.
So here's our trade. So you guys get it for free now, everybody.
So someone's starting off that.
Here's our fills. I guess the write-up is not complete.
Like we're still getting a whole bunch of people saying it's not posted in the Telegram. So
maybe there's a Telegram issue.
Yeah, so maybe Telegram is like having an outage. Because I mean, I'm looking at it right now. It looks perfectly fine to me.
8 other people emojied it. So
it only shows in the fills.
Are you guys seeing what Graham is seeing right now? Like what right now he's showing you the whole thing. Are you seeing that, or is Telegram having
they said we have fills, not corrections. You guys don't see this right here?
I see it.
I think maybe Telegram is having a freak out or something.
Do you see it on yours, Nate?
Yeah. Oh, yeah. I've seen it since 10:35 on the initial trade, and then the 10:41 fill in its completion.
Some people are still saying no.
Yeah. So just make sure, guys, you are looking at, for all of you saying no, that you're in the 60-minute Telegram at least. But it seems like, that's weird. It's literally like truncated. Graham, you want to just copy and literally throw it right back into Telegram and just see.
I believe. Let me just through. You guys can. It's still break even here, so it has not moved. Stop posting no, or else you're going to lose this trade. Here it comes. You guys can still get in for the same price. Okay, we're still posting. Here it comes one more time. I'm getting overwritten by people. Right now, mine is down -1%, so you can get a better fill than me right now. And if you're joining for free, have fun on the free ride. Hopefully it works.
Well, there you go. Well, so it looks like Telegram is having some kind of very odd outage based on that feedback. I don't even know what to say about that. That's because it's not even people saying they didn't get it. They're basically saying they got part of it and it was like truncated or something. So very, very bizarre. Graham posted in there so you guys have it. In the meantime, you might want to X out of Telegram, maybe do a Telegram update if needed, all that sort of stuff. But
yeah, that's weird. I've never seen that before.
No, neither have I.
But the good news is, luckily, you can get in for it's at 0% now. It's the same price. Cool. All right. Well, thank you guys for bringing it to our attention. We actually do appreciate it when there is an error.
Yeah. Yeah, we don't even know
Telegram
what
is frozen, said Keith.
They must be having an outage.
Yeah.
But thank you guys for letting us know, because obviously it looks perfectly fine from our end. We would have never considered anyone who emailed support. We would have told them no, they're confused. It's fine. So thanks for letting us know.
We just assume you were in the general one and not the 60-minute one.
Yeah, 100%.
Yeah.
All right. Cool.
All right, let me go ahead and post these in the trade sheet.
I started to think I was going nuts. Like, I swear I'm looking at it. Am I looking at the wrong thing? Because me going nuts is usually the answer to the question.
Oh, that's not the one I shared with you guys. The cool thing about the Apex, Nate, is as like Eli Lilly's price moves, it will give us the best matching options for that time. So like even if you guys were to check it tomorrow and let's say Eli Lilly was up $10 tomorrow, it's going to give you new strikes.
Yeah, I love that
risk reward that you want.
It also puts you totally in the driver's seat. I mean, if you're on, vacation for 2 days, you still like the trade when you get back, whatever the case is. That's a big reason I'm doing the overnight toll too. It's a much tighter window, but in that 30 minutes, it can move. And so having the ability just to get the exact options you want. So
yeah, with that said, I do think that I'm gonna give it the dev team, because this target, I believe, should be about 850, 868. So I'm going to check that one out later. All righty. Well, thank you guys for alerting me to the 60-minute income channel. Hopefully that works for you guys. 2 weeks ago, we did the hot sheet pick of the week on Tesla. This is our seasonal pick of the week. We did what I call a lotto board trade, if you will. 304% right now on Tesla. Not too bad. I've seen better. We typically pull 1,000% CLSK. It's very typical. I'm just joking. I'm being sarcastic. Obviously, love it when we get a big win like here on Tesla. But let's keep on going. Last week, we did VST for our seasonal pick. And with the correct options application, or what I would consider the best options applications, up 36%. So hopefully we can keep that streak going here. Next pick here on the hot sheet, and I think you guys are going to love it. I love it because I own a lot of this stock right now. This is one that we've been very bullish on, very excited about. Back here at 170, I told you that I believe that all of the headlines about Google search revenue being in question and something that's going to really struggle for them. I said I think all those headlines are wrong because I started using some of the Google AI. I really loved it. They integrated it with their search. They also are running some really cool ads. It's funny. People don't really pay attention to ads, Nate, but if you notice, if you guys have been doing this for a while, when you're watching football games or watching whatever you're watching, typically the companies that are running a lot of ads, their stocks end up doing really well. Progressive has been a big one like that, Allstate, but even like ServiceNow. I don't know anything about ServiceNow. I don't even know like why they would target me. I don't think I will ever spend a penny with ServiceNow. But they were running ads like crazy. So I said, let me look at this stock. Ended up being a great stock for us last year. So Google, as funny as it is, they've got some really good ads going right now where I think they're going to start gaining some market share on AI. They're going to start stealing those ChatGPT, original, what am I trying to say? Customers like they did for me. And also on top of that, it's a seasonal pick here on Google. Over the next 25 days, Google typically goes up about 3% or goes up about 3% over the next 25 days here. And that's worked out 100% of the time. So what I'm going to do here is put together a little trade for you guys. And it does look like VST is down today. So you guys, Bill, you're probably right. VST is down 12% for me now, or now down 6%. It was up when I pulled this one yesterday, but still, hey, there you go. Still a viable play there. But for Google, I like Google stock. I own a lot, and I'm glad to see it's seasonally bullish. What I'm going to do here, I mean, this thing's just been a behemoth. I don't think this is the right chart for Google, to be honest with you. Let me pull up the chart of Google here. What is this chart? Oh, that's VST. I must have not updated it from last week. All right, let me throw Google in there. Here's our Google chart. And what I'm going to do here now is pull up the options chain on Google. I'm going to try and match up our expiration and hold time and the average move. I might have gotten a little too big there. We'll see. All right, so Google, we know, and you see I have some options, so this might be conflicting. We know Google goes up over the next 25 days, 100% of the time. That puts us, 17th of October expiration. Please don't be the same strikes I have. All right, well, I already have some Google trades on. We'll talk about a couple ways to play it here. Okay, 60-minute channel has been frozen. Hopefully you guys were able to make some, we're able to get that trade here in the chat. Let me go ahead and type up Google here. Google hot sheet. I'm going to give you a wrap order here, which just means we're going at the money for a drift slightly higher. Buy, and this is timing up perfectly with our seasonal window. 250 call, sell 17 October 25, 252.5 call. Net debit 130. Looks like it just moved. So 130, 135, somewhere in this range. That's our Google seasonal trade here, which again, all we're saying here is, hey, Google may go up 3%, it may go up 10%. We don't know. We just know seasonally it's strong. Technically, it's strong. And if we're looking at a chart here, all we need Google to do is by 10-17 be above this line in the sand. If you do, which again, just look at this, guys. Do you think our odds are better than 50-50 here? I don't know. I do. If you do this across enough stocks, I think you got some pretty good odds here. But the stock that's going higher tends to keep going higher. We don't even need that big of a move. You get around 100% return on investment. At 130, let me give you a number. You get 12 divided by, you get 92% return on investment if Google barely moves here over this seasonal time frame. Now, if you want to go a little more aggressive for that more elite trade or out of the money lotto style pick, we would be looking about 258 price point, which I believe that's right around the options I have. So I'll just give you guys these options here so I don't overwrite myself. Well, this is going to be a more aggressive play on Google. 17 October, we're going to buy the 255 call, sell the 260 call. It's at a net debit of 195. That max profit is $5. So this is going to be about 150% return on investment here if this one works out. Personally, I actually like that wrap order better right now. But if you want the more aggressive play, that's how you could line it up here on the chart. So you would need Google at 260 by 10-17, 260. So again, not even that crazy of a move, just a drift slightly higher. And you're at about 152% ROI there on the trade. Now, just a teaser for you guys. We just went through a nice little process there of me finding a seasonal stock for you guys, going through the options chain and taking the picks for you. A little teaser. Wouldn't it be nice if this was like the Apex software where it goes, finds these picks for you, just like Apex does, and then you get a couple different options, recommendations automatically sourced by the dashboard. If you guys would like that, give me a yes in the chat. I think that's the next thing I want to build is looking at these seasonal windows of strong stocks and doing exactly what we did for Apex. Time up the expiration with the average hold time and time up our options with that average move, and then have it all automated for you guys so you can use it anytime, any day to find these picks like here on Google. Okay, thanks for posting, guys. Is it Google or Google? Both can work. I did the trade on Google, and they should be the same price. So Google should be the same price. I did mine on Google. It's the same stock. They just have two. They just haven't split. It's A shares, B shares.
And I guess on the same question there for the yes, because obviously I'm excited about some of that too. I think another question, if we could get a yes in the chat, just in general for you guys, do you like the idea of Graham and I not only building services and strategies, because I know I still have a whole bunch of things in the pipeline that I'm building. I know Graham does as well, where we, have the ability to give you a prescriptive trade, but also put you in the driver's seat where you can go in, like I said, you're on vacation, you're 2 days late, you can pull it up, manage it yourself. Do you like the idea of having more and more services that we do that really give you, both? Like maybe your one trade a week is still going to be our high conviction, but then you have a tool that you can go find other stocks you like and update the trade in real time if the stock moved $1 and give you a new price. Is that in general an appealing concept? Because I think that is somewhat the direction we're going, maybe not on everything, But on a lot of things where the fundamental strategy will work, and often it's just a matter of making sure that you're, getting the updated trade, getting the right time, getting the right trade management. And so trying to make that like as easy and streamlined for you as possible, I think is one of the biggest things we can do on the practical side.
Mm-hmm. Yeah, I think it's awesome. Another little teaser, since we're doing teasers right now. Give me a yes in the chat if you would agree with this, and a no if you would hate this idea. What if I included this dashboard on the Clock Stocks membership as well for the current members?
I was going to say, you might need to clarify. What does that mean exactly, Graham? Because that's a pretty big thing you just threw out there.
I'm saying I want to make sure you guys have the best experience ever in all of my programs. And I think that with the Apex, the feedback we got from taking it from indicator to software and doing that for the members was so big. I would love to do that on the Clock Stocks members. Of course, we'll have to talk with Josiah. We'll have to talk with the team, make sure everything works out. Of course, prices will keep going up. They have to. But for the current members, I want to make sure you guys are really, really taken care of. So if you would not like that, give me a no. I'm looking for at least one no. Just kidding. I don't think anyone would say no. Of course, we'll talk about that here over the coming month or so. Really, really want to hook you guys up. Last week we had BK for Newton. That one still looks good right now. I'm not going to give a trade on it. This week we had NVIDIA flag on Newton. We also know that NVIDIA was a current Apex entry. It's down a little bit today, but this could be a good one to trade, especially what I would do here with NVIDIA, guys, is I probably want to enter right now, unless you want to add another position, be my guest. But with Newton flipping green here on NVIDIA, let me make this bigger. I would set a alert here on Schwab because it tested the all-time high price. You can see it there. See that line, how it hit it back here in August. It hit it here in late August, and it hit it here just yesterday. I would look to see, I would set an alert in Thinkorswim or whatever brokerage you use. If NVIDIA breaks above 184, let me get the exact high price that we have here. 184. All right, so if NVIDIA breaks above 184.55, Newton would obviously still be green. We'd still be in an Apex entry, but that would be a very, very high conviction play because stocks that make new all-time highs tend to keep drifting higher a little bit past there. So set an alert on NVIDIA at 184.55 if we get a break above. That's a multi-level high conviction trade here for NVIDIA. It's also a tech stock, which we know tech seasonally is going to be strong here. Remember, again, I still think we got a melt up coming. I still think we got a lot of good trading action over the next year. 100% of the time when this data aligns, stocks have gone up over the next year. Doesn't mean it's guaranteed, but when it's happened 22 times of the last 22, we know that we have a pretty strong conviction here. So what we're going to do now is we're going to pivot on over to, we did these some of these trades here, structuring them with that wrap order where we're going for 100% return on investment, even if the stock barely moves. That one that was really crazy to me there was Lilly. We gave Lilly 4 months to move $2. If we're right, you make 100% return. That's crazy. Actually, Lilly had to move $2. I don't know what I just said. But we do this each and every week. We just had our 100th trade, Nate, go out last week. Oracle ended up being winner. We have a new trade open right now. Funny enough, I would love to come on today and say it's up big and you guys all missed out. But actually, it's pulled back a little bit today. So if you pay attention today, you can actually get in a little bit cheaper with a better risk to reward than what I got in at. So that's why we're going to pull that up right here, right now. We're going to show you how I like to trade options. I think it's a market hack. It's a way to rig the game. It's a lot of fun. We do it week after week. And regardless if you decide to trade it with me this week, next week, or whenever, it is a great understanding, a great fundamental understanding for a much better way to trade options, where you're going to see, just mathematically speaking, where the profits are much bigger over the long haul. So we'll get that up.
And Graham, here. just ballpark, how much ROI potential will they have if they jump in today on that trade?
Let me give you a ballpark here.
You don't have to give me exact. I'm just curious if we're talking.
I'll give you exact, now. my friend here.
Okay. Because I'm thinking about taking it. I'm thinking about jumping in.
It's a 400% ROI right now if you jump.
Oh my goodness! All right, well, 400%. I'm gonna take it. Love it. All right, sweet.